if you don't understand the function of money and how the money system works, then you're not going to be able to make educated choices that fully put your best interest first. So what I realize is that I need to help you understand what money is. Because originally it was about enabling a society to specialize. You can have a baker, you can have a farmer, you can have a banker, you can have a lawyer. So they needed a tool to value that labor. And they tried many, many things over the years. But only gold actually meets all the criteria to be a good money. And it's a labor-based money. But of course, if you have gold and the government comes and takes it away from you in taxation, you might not agree with it. So they started the transition out of a gold money and a silver money into a fiat money. And they have to do it slowly so people don't realize the change. So what did they start with first? Well, they started with gold certificates. Now you can see a closer picture, and what does it say? $10 in gold coin payable to the bearer on demand. So if you went into the bank with this, you could walk out of the bank with this. Or you could deposit this into the bank and walk out of the bank with this. So let's really talk about money and how they make this transition. And let's start that in 1913 when we started the transition from a gold standard onto a debt-based standard. And this was the beginning, right? This, which you can barely see, but you've seen a picture of it, right, is a $1 gold coin. It is 0.0484 ounces of gold, so roughly a 20th of an ounce of gold. And back in 1913, this would buy 9 loaves of bread, because back then a loaf of bread was 11 cents, okay? So you could have bought it with this little gold coin or this silver dollar or this silver certificate. And what does it say on that? Payable to the bearer on demand, $1 silver dollar, right? So you can see what this all looks like. But then they started the transition. So what did the Fed do? Well, they just started printing and printing and printing. Kind of slowly because they had to go through Congress. And what does it say on these? Well, they're no longer gold certificates or even silver certificates, but now they are Federal Reserve notes, and a note is a debt instrument. So what I'd really like you to see is how they make this transition. And you see the coins, there's a $50, and you see it's all silver, you can see that line. Then you can see the transition where no longer is it a full half ounce or roughly a half ounce of silver. It has copper in it with just a little bit, 40% silver. So we went from 90% silver down to 40% silver. But my goodness, kind of looks the same as you can see. So they could make that transition, and the public didn't realize that anything had changed, when in reality, in 1971, everything had changed, because then everything went to this. Now you can see how closely the dollar bills, the $10 bills from the gold certificate to the fiat money certificates, you can see how closely they look. Because what they know is that people marry the legal money of the state. So people got used to seeing this gold certificate and this silver certificate, so that when it transitioned into a fiat certificate, nothing changed. And after all, we were told that if we buy American-made products, nothing will change. Of course, they shipped all the jobs overseas for the manufacturing jobs, so everything has changed. And after 1971, it's been constant with that. So this little $1 gold coin, or this silver dollar, or these 10 silver dimes, now, you know how many loaves of bread this buys? Well, If we do the math, right? So 0.0484 ounces of gold in a $1 gold coin. Then at $1.53 a loaf, which is what the BLS says the average price of a loaf of bread is, would buy you 56 loaves. So hold on a second, let me get them. Okay, so we've got 9, 10, 14, 25. I am going to donate all these loaves of bread when we're done with this experiment. 28. I mean, do you get the point? It's not that this bread is worth that much more money. It's that the dollars are worth less and less and less. So when you see the price of a stock market going up or real estate going up, is it really that is worth that much more money? No. It's that because of all of the printing and all of the debt, it's worth that much less. The function of the money today is to get you to volunteer your labor and your work and transfer that their way. So what we're going to talk about is how to protect your purchasing power, how to protect your real estate values and keep them. If you like this clip and you want to watch the full video, just click right here. And to subscribe, click right here.